Welcome back to the channel dedicated to uncovering the most intriguing corners of the market, especially those stocks showing signs of unusual borrow activity. Today, we're diving deep into a fascinating micro-cap that's recently appeared on our hard-to-borrow screen at CIIT. We're going to break down why this stock is grabbing attention with an incredible annualized cost-to-borrow rate, and what that could mean for its future. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's zoom in on CIIT. This is a microcap company with an estimated float of 7.3 million shares. The sector is currently listed as N/A, which is typical for some early stage or lesser known entities. Our internal composite squeeze score for CIIT, which combines factors like cost to borrow, borrow supply, float size, and price momentum, currently sits at 44.5 out of 100. Show overlay with key stats. Now let's talk about recent price action. Over the last 5 days, CIIT has seen a 0.0% change. Looking back over the last 30 days, it's also seen a 0.0% change. Even today, the stock is showing a 0.0% change. This lack of movement is reflected in its volume. Today's volume is 0 shares, with a 30-day average volume of 0 shares, meaning its relative volume is the ARC's average. This tells us that, for now, CIIT is incredibly dormant in terms of trading activity, making its high cost to borrow all the more striking. What is cost to borrow and why it matters? So, what exactly is cost to borrow, or CTB? In simple terms, it's the annualized fee that short sellers have to pay to borrow shares of a stock before they sell them. When you short a stock, you're betting its price will go down. You borrow shares, sell them, and hope to buy them back later at a lower price to return to the lender, profiting from the difference. Show animation: short seller cycle. The cost to borrow fee is determined by supply and demand. If many people want to short a stock, and there are very few shares available to borrow, the fee goes up. These fees are expressed as an annualized percentage, and yes, they can exceed 100%, sometimes vastly so when demand to short is incredibly high and the supply of shares available to borrow is critically low. For short sellers, a soaring CTB significantly eats into their potential profits and increases their risk. Why this stock is hard to borrow right now. This brings us to CIIT. The annualized cost to borrow fee for CIIT is a staggering 950.2%. Highlight CTB number on screen. This is an exceptionally high rate, signaling a market where there is either immense demand to short CIIT, or an extremely limited supply of shares available to borrow, or both. While the exact number of shares currently available to borrow is unknown, such a high CTB strongly suggests scarcity. With an estimated float of just 7.3 million shares, CIIT already has a relatively small number of shares trading publicly. If a significant portion of these shares are already shorted, or if institutional holders are unwilling to lend them out, it creates a very tight borrow market. Our composite squeeze score of 44.5 reflects these underlying metrics, particularly the severe CTB. However, it's vital to understand that a high cost to borrow does not guarantee a short squeeze. It can also indicate that short sellers have very strong conviction in their bearish thesis and are willing to pay a premium to maintain their short positions. Squeeze mechanics explained. For those new to this, a short squeeze occurs when a stock's price surges, forcing short sellers to cover their positions by buying back the shares they borrowed. This buying pressure, in turn, pushes the price even higher, trapping more short sellers and creating a cascade effect. Show animation: short squeeze cycle. It's a positive feedback loop: high short interest plus limited borrowable shares plus a catalyst like positive news or increased buying volume equals shorts rush in to buy back shares, driving the price up, which then forces more shorts to cover. Dilution risk check. One critical factor that can severely impact a short squeeze thesis is dilution. Dilution happens when a company issues new shares, increasing the total number of shares outstanding. For CIIT, our checks found no recent dilutive SEC filings such as -1s, -3s, or 424Bs in the last 90 days. This is generally a positive sign because new share issuance can provide short sellers with an easy way to cover their positions, thereby reducing the squeeze pressure and often depressing the stock price. We also found no recent reverse splits for CIIT in our look-back window, which can sometimes be a sign of financial distress or an attempt to artificially boost share price. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Given CIIT's current dormancy with zero volume and zero price change, what should you watch for? First, any sudden increase in trading volume would be a major indicator. From zero, even a small amount of sustained buying could be significant. Second, look for price movement. Even a modest uptick, if accompanied by volume, could start to put pressure on shorts, especially given the astronomical 950.2% cost to borrow. Third, keep an eye on borrow metrics if they become available from your broker or data provider, specifically whether the number of shares available to borrow for CIIT continues to shrink. Fourth, any company-specific news for CIIT could act as a catalyst, sparking interest and potentially challenging the short thesis. Remember, with a small float of 7.3 million shares, any significant buying pressure, should it emerge, could have an outsized impact on the stock price. CIIT presents a fascinating, albeit dormant, case study in the hard-to-borrow universe. Its current 950.2% annualized cost to borrow is a screaming signal of potential scarcity and high conviction among short sellers, or perhaps both. While the stock currently shows no price or volume action, the underlying borrow dynamics are certainly worth keeping on your radar. Always conduct your own thorough due diligence before considering any investment. If you found this breakdown helpful, please like this video, subscribe to the channel for more deep dives, and let us know in the comments below what other hard-to-borrow stocks you're watching.